I'm going to hit. Okay, there we go.
Perfect. So now everyone knows we're being recorded for quality assurance purposes, but also to be able to share this out later on. Again, my name is Eric Lynn, Chief Commercial Officer for TLC Companies, and we like to perform these types of webinars, educational, informative webinars, every couple months or so for our clients and respective partners that we deal with on a daily basis. And today is one on worker opportunity tax credits that I'll tell you from my own personal experience, my last organization, this was very material to what we did from a profit and loss statement. And I was in the blue collar staffing space, and we employed hundreds of thousands of folks that were at certain income thresholds that were lower income thresholds, where we were able to participate and realize quite a few tax credits for that, to where, again, it was material to our profit and loss statements every year. So that's why I'm excited to have Doug on today with WOTC to talk us through the impact this could have to your organization. And it's dollars, real dollars that you may have access to today that you're not accessing today. And that's what we want for our clients. We want the best for our clients, and we can find opportunities like this. We're gonna take advantage of them, educate you. And of course, Doug and his company, this is what they do. They can partner with you to do kind of an audit, and I don't want to steal his language or anything like that, but kind of do an audit for you and see where you lie and see what you might be able to take advantage of that's free to you every single year. And this is something that Congress continues to, even though sometimes it goes down to the wire, they always renew this. So it's appealing to both sides of the aisle, which is also good. So with that, Doug Simon of WOTC, he's going to run the controls today, do the presentation, and I'll let him take it over. So thank you, Doug, for joining.
Well, thank you for having me. Good morning, everybody. I'm going to mute everybody right now. And again, there's the chat box, and I will open this up at the end, though, if there's questions. I'd like to think I do a pretty good job bundling this together. So hopefully by the time I've completed about 15, 20 minutes, I've answered your questions in advance. But I'm going to mute everyone now. Okay. And I'm going to share my screen and get started. So again, Eric mentioned it, and you might have heard that term WOTC. It's actually the Work Opportunity Tax Credit. Now, this is a federal income tax credit, which is interesting because we actually work through the state to actually certify your new hires, if they are eligible, to create a federal credit. The credit is based on the government realizing there's certain individuals, and they call them targeted groups, that face barriers to employment. It's always been very difficult for them to find jobs. And so what they want to do is, in a nutshell, they are going to incent a company like yours for hiring these people, and it comes in the form of a tax credit. And this tax credit it's called a new hire credit. It's based on that first year, a percentage of wages from the first year. There's one exception where it's 2, but this is a new hire credit. So before we talk about the eligibility groups and who these people are, let's talk a little bit about you. Who is eligible as far as claiming these credits? This is a for-profit company, which I gather all of you should be, or most of you should be. So it is a for-profit company. This is for your W-2. This is for your true employees. You know, with COVID, you've seen a lot more 1099s. Some companies are a little heavier in 1099s. I'm just going to let a few more people in, pardon me. And this would be for your W-2s. As far as how that tax credit gets applied to your tax return, it's, if you're a C Corp, it is a corporate tax reduction. If you're an S Corp LLC, it could be a corporate tax reduction, or they call it a pass-through. It could actually go onto your owner's personal returns. So in your helpful hint here, this is actually through the Department of Labor. 20% of eligible employees might be eligible for this credit. So here are the 10, they call them the 10 targeted groups. I won't go into detail. Some I certainly want to explain. They're a little more common or just a little interesting. So you'll find TANF, Temporary Assistance to Needy Families, used to be called welfare. You're going to have veterans. Now a veteran, this is a veteran in need. You can have felons. This is an interesting one, the designated community resident. So it may be an urban renewal, an urban empowerment zone. And I gotta let a few more people in. You can have some summer youth. This is probably the most common one right here. This is called SNAP, Supplemental Nutrition Assistance Program. That used to be called food stamps, very common. You could have your SSI. I'm gonna go backwards here. And you saw a lot of this with COVID, your long-term unemployment. And then another interesting one is called long-term TANF, which again is the long-term temporary assistance to needy family. So you can actually hire somebody, they are not receiving a direct benefit, but somebody in their home is, it could be a parent, aunt, uncle, somebody in that home. If they're getting the benefit, that means your new hire, even if they are not receiving, might be eligible. Each category is going to have a maximum tax credit value. So SNAP, food stamps, is $2,400. Your TANF, which I just mentioned, is an interesting one. This is the only one that goes over 2 years. It could be up to $9,000, $4,000 on year one, $5,000 on year two. Your veterans is what I like to call sliding scales, depending on their need. So if they are eligible, there is a qualifier. And for the full credit, where it's an hours and wages, but the hours really take care of it, it's 400 hours. So if you work 400 hours, you're able to see these credits. Again, this could be a part-time person, 20 hours a week for 20 weeks. So yes, your part-timers are eligible. In the case for one reason or the other, an employee doesn't work out, if we even got them to 120 hours, you could see a partial credit on this. So the program is based on the 8850. This is a work opportunity tax form submission form that your employees fill out. Now, what we've done is we've kind of electrified this. It's a government form, could look a little scary to some folks. What we're able to do is also embed this if you have electric onboarding. And this is something that can just be right in as they're filling out their W-2s, I-9s, etc. So you could have this actually done electrically, and there's a link for that, which I'll explain a little bit more later. It can also be emailed, fax, uploaded to our system. We have in our electric form, English, Spanish, Russian. If you needed another form, it would be paper, but in another language, we can translate that for you. So it's a very flexible program. There's not a lot of deadlines. In fact, this is really the only deadline of note with the whole WOTC program. And that is, we have to get this form submitted, so it has to be filled out and submitted to the state within 28 days of their start date. So again, if I was hired today, but starting Monday, it's about Monday, the start date. So that's kind of how the state workforce agencies are able to set a clock. So what do? This is really where we get involved. Your employee is going to get that link, which is going to get them to that form, very simple form to fill out. That's going to come to us. And this is where we like to think we separate ourselves from all of our competition. Every single form that is submitted, we're going to have a human being review it by hand. Some of the states are very finicky. So we're looking for spelling errors. We've seen things denied because of punctuation error. So our favorite words are capture rate. We're going to do everything in our power to get the capture rate. We're going to make sure that form is neat, clean, and proper. So if somebody is eligible, they are going to see that credit. Then once we have things sent in, we have this wonderful software, and our software will also create reports for you. So every month you can see it online 24/7, but we're also going to email you a report. We'll track who is eligible, who's not, who's certified, and those credits that you've received. So what's going to happen is at some point, you're going to have enough people that are certified. They were eligible. The state said, yes, we certified them. You're actually going to get a 5884. That's the actual work opportunity credit. So what really happens is a credit will really have a number of people on there, 10, 20, but you don't do one per person. Ideally, we'll do this 2, 3, 4 times a year, depending on your volume. Will be very personalized, and I would work directly with you to figure out how many times a year we would want to create the form. Basically, though, this can be done on our system electrically. We could do spreadsheets. You can upload. So, and there's some integrations available. We could talk about integrations on another call, but there are options in getting that information to us. And what's wonderful about our program is you'll have a dashboard with all your information. We can actually take, if you have a CPA, if we have their name and we have their email, they can't see any of your information, but what we can do is anytime a credit is created, we can have that credit sent to your CPA, because sometimes credits happen mid-year. They would have that information in the middle of the year already there. So there's no hunting for documentation when it's actually tax season. Here, I think the government was wonderful, and they actually gave you a little bit of flexibility on the credit. You can actually bring it back 1 year. So if you got a credit, you could carry it back 1 year. That would be an amendment on your taxes. But also you could carry it forward 20 years. So especially in the case of starting up something and you don't have liabilities, you can push this forward up to 20 years. So very flexible, very flexible credit. So here I think is really the reason I think Eric selected us, and this is where we are very different than our competitors, and this is what we do for you. We are going to cross-reference, as I said, every single submission form. We're going to look at it. Human Beings is going to look at it. We're going to make sure we can do anything to get that capture. I showed you on a slide before, it said pre-qualified. So we pre-qualify. We have people that we think, you know what, they are going to get that credit. We pre-qualify them. We do send it to the state for that certification. Sometimes something does come back denied. If that is the case, we're going to resubmit. That's pretty unheard of in this industry. If there's any documentation that we need, I'll approach you. We'll try to get that and we'll resubmit. WOTC.com is actually a subsidiary of TC Services USA. So our parent company, we actually do other tax credits. So once we're submitting with WOTC, I get to know you. We might find there's some other credits in your state, a federal credit that might make sense. If there's anything that we can avail you or you can avail yourself of, we're going to let you know about those credits. Here, I think we're probably an industry best as far as is our billing. It's 100% contingency fee-based structure. So we are not going to invoice you unless we have a credit. And then again, once we do have a credit, we're going to invoice you, but we do not expect payment until you've used that credit. So you've saved that money before you even think of writing the check. So it's very different than I'd say an industry best. We have a support email. We have an 800 number, but this is, again, a huge separator for us. We want individualized customer support, and I am actually your implementation specialist. So your first call, your email, you can get on my calendar, should be to me, and I'm going to work with you. And again, another nicety is there are some integration options depending on what you use, and we can talk about that, but we can integrate as well. So here I'm going to just give you a way to give you an idea of forecasting, and we're extremely conservative. So we really want to underpromise and overdeliver. This is very important to us. And we like to use vetted numbers. We feel very comfortable, and our own numbers and our work with our clients kind of bear this out. If you happen to be a 1,000-person company, we like to use the Bureau of Labor Statistics. Bureau of Labor says that we're going to see about a 12 to a 15% turnover. And again, this was pre-COVID. And again, there's industries we know this is low, but we actually like to be even more conservative and say 10% of your workforce will turn over. So if you were 1,000 people, you would have 100 new hires. So of those 100 hires, we like to use the Department of Labor, again, a vetted number we feel very comfortable with. 20% of those 100 are going to be eligible. So again, we're looking at a potential for 20 eligible new hires. Again, as we have here in this slide, there's industries and locations that tend to have higher eligibility rates. But to be conservative, we're going to say those 20 new hires at the $2,400 base credit, you're looking at a $48,000 tax credit. That's a dollar for dollar savings off your liability. This could be a little less. Perhaps we had a partial. This could be a lot more. Perhaps you have a veteran hiring initiative, or you have some long-term TANF, which could be up to $9,000. But these are fair numbers. I would like to think that any kind of savings is good, and there's a lot of good news. Eric mentioned this at the very beginning of the call, that that WOTC's with us. He's correct. It's actually been around since 1996. Both sides of the aisle since 96 always approve it. They do it in 5-year increments. So currently, if we started today, we're going to work together till December 31st of 2025. However, great news, right now in the Senate, there's a bill, and there are senators that feel there's always going to be some need, so they're trying to make this permanent. And again, this is something, if it does happen, we'll let you know. Also, there's legislation. There was a slide I showed you a few minutes ago that had the dollar credits. The dollar credits on that slide are the same credits since 1996. So there are some representatives who feel that we need to incent people even more to hire these need groups. So if there's any information on that front, we're going to let you know about that as it happens. And again, everyone here will have a my information. You'll have a phone number, email, and then I'll also make sure you have access to my calendar so you can set an appointment with me. I'm going to stop sharing. I'm going to unmute everybody. And then if there's any questions, anything that I can answer for you, I'd like to do that. Normally what I do is I'm going to send Eric and Kendra a registration link after this call, and they can send this out perhaps with a copy of this recording. And that would actually come to me. So I would know you came through TLC. And then what I would do is send you a note, walk you through the implementation. If I have to explain anything else on this, any questions, concerns, but also at that point, I would show you what we call your dashboard. This would be where all your information lives. I would show you, here's where this would live, here's where you're pre-qualified. When you have credits, they live here. Here's a place to look. So I would make sure you're very comfortable with our software. It's extremely powerful software made so simple that it's very easy for you as a user to use. And that's kind of what we want to be. We want to be an easy value add to the services that Eric is offering. So do we have any questions? Is there anything that I can answer?
There's a question in the chat box, Doug. What is the contingency fee percentage from Erwin?
That would be 20%. And pardon me, I should have said that during the presentation, but it is 20%.
And then I've got a question for you too, Doug, that I think might be on people's minds. So with TLC, our role in the partnership with our clients is a lot of paperwork flow. So when candidates are coming through, they're going to come through our Valparaiso, Indiana office for onboarding and setting them up in the system for payroll. So I'm wondering from a flow standpoint, if someone on the call is wanting to move forward with you, I think let's just kind of walk through that, right? So we're getting all their new hire documentation, right to work, I-9s, all that stuff. Anyway, would we, as a best practice, just fill out this? I can't remember the form number. You put it up on the screen. I can't remember what it was, but best practice, just say, we fill that out and then we would ship it off to you, or does it have to be signed by the client? Like, walk me through that process.
Sure. Actually, it's very simple. And I think the good news for everybody on this call is there's basically no work for you to do at all. I think I saw something from your comptroller as well. You would come through as your own companies. And then of course that can be through the integration, as far as we would have an integrated or a dedicated link for each of your clients. So it's the new hire that fills out the form. They fill out the 8850 and they actually sign and submit the form. Once that form is submitted, that comes to us here, then each account here. So if there's 10 of you that decide to come on with us, you would each have your own account. You would see instantly that person would show up in the system as an employee. So did that answer your question?
Got it. So really it's just, yeah, it kind of does. So we're just adding 8850 to our sort of list of documents we're already gathering anyway.
Correct.
And then at TLC, and I think this kind of goes to the comptroller's question, will this be managed by TLC? And then we would then take the 8850 and send it to you, correct?
No. So you would embed that
Oh.
into your onboarding. And when they're coming
Okay.
through I-9 insurance, wherever you put it, it seems to work well near the I-9, actually. A few people have told me they've had success there because it just kind of rolls through, and a lot of that information on the I-9, funny enough, they need on the 8850. So no, they see it. It literally will kind of take them away from you for a minute into our site. It's a very simple form. And then it goes right back to where you left off. Does
Got
that
it.
make
So you're
sense?
talking about electronic.
It's
You're talking about
electronic.
though, right?
If you have paper, yes.
Yeah.
What I would create for paper is we would create a form for each company. And we would normally send it to that company, but depending where you want that, we can have it to you. We'd have one for each company. And then there would be a very simple upload. You can go into what we call the dashboard. If you've ever dragged and dropped an attachment onto an email, it's just that simple.
Got it.
And I would
And
walk
then,
anyone
another
through
question
that. Sure, I'm sorry.
From the comptroller there on the so I think the question he's asking really is around the dollar flow now. So when the credits come back and the 20% contingency we just mentioned, Doug, is collected, is that coming through you first and you're already taking the 20%, or is it coming through the client and then you're invoicing for the 20%?
Right. So there, because a PEO is kind of a different territory than other businesses. As a PEO, you could put it all under your FEIN number. My understanding is we are going to be putting it under each account as their own. So because it's under each account, I would work directly with each account. And when we do have those credits, the credits are under that FEIN, and the credit would go to that FEIN. So I would get hours and wages from that person.
Yeah, and to the audience here, that's because we want this to be realized by you, the client, versus TLC. If we put this all on TLC, then it's the TLC FEIN versus you. And so we're trying to make sure you realize these gains. Hopefully that answers your question.
Right, and I work directly with each and every one of you. When you register, I'll work with you. I'll look with you and say, you know what, as I get to know your business, I might say, we should be looking at a credit 4 times a year. We should be looking at a credit 2 times a year. Make sure I make it easy for you to upload or send that report. We can get that information. It's really not even, people use the word payroll. It's really hours and wages. It's a summary of just those certified people in that period that we decide we're going to take a credit. So we're talking about data entry of 30 seconds to a minute per person to get that information for the actual credit. So, and what I will do, which we're not doing on here for time, is everyone that registers, I'm actually going to walk you through your dashboard so you would see where everything lives, where it is, how you can find it. And of course, your first call is, I can't find it, Doug. And you call Doug, and Doug will find it with you and make sure you can find that information. That's important to us, that you are comfortable within our software.
Yeah, so to answer that original question, comptroller, which I love that name, there's a component that's managed by TLC, and that's just going to be in the document flow. So the 8850 form, we'll see to it that that's executed as part of the onboarding documents, but you'll also be working with Doug and WTC as well, just because, again, we want to see this passed on to you. So it's kind of both. We'll manage a portion, and Doug will manage a portion as well.
Right, there's no risk. I think you saw Patrick made a comment, it showed in the chat that, again, we only invoice when you have a credit, and we do not expect payment until you've actually used that credit. So it's best in class billing as far as we're concerned. I don't think you'll see that with another vendor. Do we have any other questions? Maybe
one more, Doug, on thresholds or tiers, because I know back in my old days, and again, I'm not an expert at this, but I'm a layman still. I just saw the positive impact, material impact to the organization's P&L. But there was always questions around income thresholds of qualifications. And at the end of the day, the best practice we had was we just submitted for everybody no matter what. So is that also a best practice? No matter what, you just do it and you'll kind of figure out who qualifies later?
It's brushing your teeth. A great question. Yes, everybody should, because again, some people live in an empowerment zone And Eric, you and I could go to our homes and drive every day, and we don't know we're maybe driving through one. So people don't even know sometimes that they're in an empowerment zone. I brought up TANF as a separate, the long-term TANF, where somebody might actually not get a benefit, but someone in their home is. What if you have a very prideful person in the home? They kind of hide it from you. So, right. So that's what everyone should submit. It doesn't matter if they're not eligible. It lives in an area in our software. There's nothing to worry about. But what is surprising is the number of people that are eligible. Again, 1 in 5. So you just want to make it a best practice, have it in that onboarding, whether it's paper or electric, make sure they fill it out. If they're not eligible, they're not eligible. But it is a little bit surprising who are receiving. And again, some folks don't even realize that they are eligible or making you eligible for that credit. So it's very important. Capture rate. If I'm going to leave you with 2 words, capture rate. That's everything we want to do for you guys.
Got it.
Yep.
And then the question in the chat box about how soon could this be implemented? Fairly quickly. There's just a couple of things on the TLC side we'll need to do for the electronic version. There's a little bit of reprogramming where we have to populate this form in our online application, for instance. And we also have DocuSign. We have to add it to our DocuSign version. And of course, there's the third way, which is paper, which of course we're all trying to get away from paper. But some cases we still use it. So a little bit of time that I wouldn't anticipate too much time. I think, Doug, on your side, it's pretty quick, right? I mean,
Once
quick
you are
turnaround to
set,
get signed up.
yeah, once you're set, if you had, if somebody registers, again, I'm going to send a link to Eric. So if you're interested, you'll just register, take you 5 minutes to fill that out. On our side, I'd have you ready, if not same day, by lunch the next day. So we would have you ready to go. We can receive and start processing. So almost instantly.
Yeah. There's another question too. Comptroller's on fire. Thank you for asking such good questions. Will the employee see a benefit from this? And you know, Doug, I think this is more employer focused, right? So this is going to go to the employer, but I guess as the employer, they can make a decision.
But let's talk about
do
the
with,
heart.
those
Yes.
funds.
But here's the heart of what this was. So basically, right now, anybody receiving a benefit, all of us on this call, both our companies and personally, we're paying for that. So the goal of this was to get somebody a job. This person maybe is struggling to find a job. Now, what we've done is we've taken somebody off of receiving benefits to becoming a taxpayer. So there is the benefit that that person is now a taxpayer, and there's an incentive for you. Again, turnover, that there's cost to that. So this is helping you recover some of those costs. So it's not a dollar benefit to them per se, but again, this was made that it would incent you to maybe say, I have 2 equal candidates, but you know what? We're really helping this person here. And we're taking them off the government's dole, so to speak, and they're becoming taxpayers. So is that a fair answer? Hopefully that answers that question for you.
Well, this form, yeah. So Erwin, that's our plan. As I was just mentioning, is that there's 3 versions of the TLC Hire packet. There's the online application, which is accessed through your tlccompanies.com or HR Connect, tlchrconnect.com, and you have your code to give new hires. We also have DocuSign, and then there's just regular old-fashioned paperwork. So we just have to go through all 3 of those ways to apply and insert this form, which we're going to do. It's just a matter of how quickly we could do that. On the online version, it just takes a little bit of time because there is some reprogramming we have to do. Again, I wish I could snap my fingers and just do it. The paper version is easy. It's just adding it to what we have, and DocuSign is relatively fast too. It's just the online app. But we get another question. Eric, why was this never put in a hire packet before? Hey, that's a great question, Erwin. I just started with TLC last year, so I can't go back and turn back time. I'm not Cher, but I can look after your future. So we're going to do this going forward for sure. And again, I can't tell you implications yet. To Doug's point, he gave you some national averages. 1 out of 5 qualify. You know, so we don't know what the impact is yet, but it makes no sense not to do it. I'm with you, Erwin, but that's our commitment going forward for you.
So if
anything else, folks?
Yep, thank you. Well, then I am going
Any
to.
negative impact to,
Oh,
where,
sorry.
there's one more.
Sorry.
One more. Will there be any negative impact to the employee in their year taxes? I think the answer is no.
No,
The
this has nothing to do with the
employee should
employee.
not see any impact. Yeah.
Correct.
All right, good question there. And again, we've got this recorded, and we'll send the link out as well. And Doug's going to send us a registration link. We'll forward that on to this group. And there's one more question. Sorry. Will the employee? I don't understand that quite. Will the employee be out their program for the help? I don't know what that means. Be out their program for the help. I'm so sorry. I don't understand that question, Comptroller.
You can unmute yourself
you come
now.
off mute, maybe you could
Yeah.
ask us. Yeah. No negative impact to employee whatsoever. Yeah. Yeah, I just don't know on that, but that's something we could, ask Doug at a later point. Again, we'll have this recording. We'll have a registration link. We'll send that out to this group. Thank you all so much for attending. Doug, thank you so much for the presentation. We appreciate it. We're excited to be offering this great solution out to our clients.
Well, thank you for having me. We're very excited about the relationship. I appreciate everybody's time today. Everyone's busy, and I appreciate that. And I'm going to hit stop recording. And thank you, Eric, so much for putting this together.